A high conviction Cathie Woods stock, Zoom Communications, is now down over 80% from its high in late 2020. Now, as I'm a huge believer in the sustainability of the Zoom platform, with an 80% share price decline, is now the time to consider buying the stock. Well, that's what we're going to dive into in this video. So smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up, guys, and welcome to the channel, where the purpose here is to help 1,000 people reach financial security sooner. Now, everybody who's on our monthly Patreon calls knows that I absolutely believe in the product that Zoom offers. However, I've never really been a buyer of the stock due to valuation concerns. But since Zoom is now down 80%, it was something that I really wanted to dive into for the Patreons, and I'm going to share that analysis with you guys in this video. So diving right into it, you can see here that Zoom's share price declined over 80% from $559, which it reached in late 2020, and it's now down to $111 per share. And that reflects a trailing PE ratio of 25 times earnings. And moving on, you can see that they had great performance in 2022. Revenue grew 55%, and their adjusted free cash flow margin, which is effectively just what you would think calculating free cash flow is 38%, which is huge. And what I really love about the company is that they're not just focused on the Americas, they're really looking to focus on growing internationally. And that's what you can see here, where right now you can see that although the Americas are still a large part of their revenue, you can see that the rest of the world is starting to gain revenue share. And you can see that with the chart on the right, where the revenue share of the Americas has dropped slightly from 67.2% to 66.9%. And I think that the Americas becomes less and less important overall as the company continues to grow. So that's really good to see for their next leg of growth. And you guys already know, I absolutely love companies that are able to replicate their growth internationally. And looking into 2023, you can see that they're forecasting revenue to be around $4.5 billion and their non-cap EPS to be around $3.50 per share. But that slide on a standstill doesn't necessarily mean anything. And so what I did is I actually created a model on Zoom for the Patreons, which you can grab at the $5 per month tier. And of course, I always say this, if you're not interested after the first month, just message me on Patreon and say, hey, Tay, it wasn't for me, and I'll refund your money completely, no questions asked. But looking into the model that I did build for the Patreons, you can see that they grew huge in 2019 with year-over-year growth of 150%. In 2020, the year-over-year growth was 118%. 2021, it was still close to 100%. And then, of course, the lockdown year of fiscal year 2021, they grew 326%. And then, of course, the rollover impacts from the growth in 2020 led to them growing 55% in 2022. But notice what management is forecasting for 2023. They're only forecasting a 10.5% revenue growth on the top line. So what management is really doing here is they're solidifying what everybody already expected to happen with this company, which is that as we go back to work, the revenue growth is expected to slow down. And that is in complete contrast to what Cathie Woods was saying was going to happen to this company as of last year when she was interviewed on Zoom. Here's Cathie Woods on that point.
Let's see, the other one, Zoom. Now, interestingly, I listened to their call yesterday or the day before, and I realized something. First of all, it's mind-blowing. Most stay-at-home beneficiaries, the stocks, they peaked in the summer last year. Zoom was cut in half from $600 to nearly $300 last week. Got the earnings report this week, and most people have been saying, okay, yeah, we're kind of getting back to normal. They got to slow down. Its growth rate accelerated from listen to this, 365% year-over-year growth to 369% year-over-year growth, a $900 million run rate, which is $3.6 billion annualized. That's what people's estimates are for 2021. They're wrong. It's going to be much higher than that. The world has changed.
So as I showed you earlier, that insane level of continued growth, as predicted by Cathie Woods for the top line, didn't really materialize. But that being said, the company did record revenues that were higher than what the streets was forecasting. So she was right on that comment. But you can see here that for fiscal year 2023, I am just forecasting revenue at $4.5 billion, which is what management is telling us to forecast at. Then subsequent for the next 4 years, I'm just using 10%, which I think seems reasonable, but I'm not really an expert there. I don't know how it's going to grow out. Cathie Woods believes that even 20% is low. So I don't really know how to think about it, but generally when I'm unsure, I'm going to be conservative on my revenue estimates. I think 10% is reasonable here. But of course, if you have access to the Patreon models, you can download the model and change the assumptions as you deem fit and determine what valuation comes out that makes sense for you. So here's the question. Why exactly does Cathie Woods believe that revenue is going to grow at a much higher clip? And to sum it up, she really believes that Zoom is going to take over the telecommunications spend by companies. And I actually agree with her. Just being on the inside with technology companies or industrial type companies that I've been working with during the pandemic, I see this being adopted. But that being said, I don't see the growth at the same rate at which she does. So here's Cathie Woods speaking on that point.
And I think Zoom is playing in the largest part of the technology stack out there, the $1.5 trillion telecommunications part of the stack. And I think it's going to usurp a lot of the old telco infrastructure. So I don't think people understand that. So we're pretty excited about it and actually like that the sentiment right now is so negative. People think this stock at about $110 billion is selling at an outrageous multiple to sales. It is not if our estimate for this year is right. In fact, it's probably undervalued. I know people think that's outrageous, but stay tuned.
And here's the funny thing about that clip. I actually agree with her. If we're all using Zoom to communicate, then why do we need phones at our desks? And in fact, I haven't really used a phone at my desk for over 2 years. Now, when we go back to the hybrid work environment, will we go back to using the phones on our desk? Maybe, but I don't think we really need them since nobody's really been using them for the last 2 years, albeit companies have been paying the bill. I do know that for a fact. Now, moving on into the valuation for Zoom. And once again, all the Patreons have access to this model. You can see that even with a high terminal multiple of 25 times earnings, I'm getting to a valuation of $97 per share on the EPS. And that includes $18 per share of just excess capital. So in fact, I'm valuing Zoom at 80 bucks a share, and I'm getting to $100 per share by adding the excess capital. And you guys might be wondering, what exactly is that excess capital? Well, you can see here from their balance sheet that they have $1 billion of cash and $4 billion of short-term investments. So you add those together, you divide it by the number of shares. That's how I'm getting that $18 per share of excess capital that they really should pay out to shareholders or acquire other companies. Really up to them. So here, once again, I am very excited about Zoom as a business. I love it. I think they're the market leaders. I think they have a better product than what Microsoft offers. And you guys can argue with me in the comments below about that. But that being said, from a valuation perspective, I'm still not a buyer of Zoom. I'm not going to be looking to buy this company for anything over $40 or $50 per share, but that's just me personally. I am Dr. Doom when it comes to valuations, but that's just how I stop myself from losing money. You guys let me know what you think in terms of buy price for this company. And if you guys haven't kept up with the Twitter situation, I documented that whole Twitter fiasco that's happening right now with Elon Musk right here.